Good morning, everyone, and happy Thursday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. I am here with videos Monday through Friday out before the opening bell, so make sure that you're subscribed to the channel and have those notifications turned on so you can stay up to date with all of our latest videos. As always, today we'll be taking a look at exciting stock market news, this morning's biggest gainers and losers, as well as notable earnings reports, which this week there are plenty. So let's get into it, starting off with stock market news. U.S. stock futures are decidedly in the green this morning, with Dow futures up 0.5%, S&P 500 futures up 0.7%, and NASDAQ futures up 0.1%. This follows remarks from President Joe Biden saying that America has really turned the corner with the pandemic and that America is on the move again. We also heard comments from Fed Chair Jerome Powell, who addressed the economy, saying that it is beginning to move with real momentum. Mastercard will be the exclusive card network for Gemini's cryptocurrency reward credit card. The cryptocurrency platform has selected the payment giant along with WebBank to offer several innovative features as part of the offering. The Gemini credit card, powered by Mastercard, will offer an easy way of acquiring Bitcoin and other cryptocurrencies. In addition, holders stand to earn up to 3% back on purchases involving Bitcoin and more than 30 other cryptocurrency that Gemini supports. Gemini is in the process of building a crypto rewards platform that will ensure the crypto rewards are delivered in real time into cardholders' accounts. Instead of waiting for a month, as is the case with most credit cards, Gemini cardholders will receive their rewards as soon as the transaction occurs. The Mastercard stock currently comes in as a strong buy with an average upside potential of 5.85%. Google is battling a £3 billion UK class action lawsuit. Google maintains that the lawsuit, which alleges that it tracked millions of Apple iPhone users, is not viable and thus should not proceed. Richard Lloyd, a former director of the consumer rights group Which, is leading the landmark claim against the tech giant. The class action lawsuit focuses on more than 5 million people who used iPhones between 2011 and 2012. Lloyd says that Google makes billions of pounds in revenue from advertising based on our personal data every year. It is only right that they should be held to account for profiting from the misuse of that personal data. The Alphabet stock does come in as a strong buy with 35 buy ratings and 1 hold. Many analysts updating their price targets after a solid quarterly report just yesterday, with an average upside potential of 14%. Integrated energy company Portland General Electric has declared a quarterly dividend of 43 cents per share, increasing its annual dividend by 5.5%. Portland General Electric evaluates its dividend policy based on its capital requirements and is targeting a long-term dividend payout ratio of 60 to 70%. The payable date for the quarterly dividend is set for July 15th or before. Additionally, last week, the company, along with Daimler Trucks North America, unveiled Electric Island, which is a charging site for heavy-duty electric trucks. The move will aid in developing and deploying zero-emission commercial vehicles. The Portland General Electric stock does come in as a hold across the board, with not much future upside according to analysts. Now let's take a look at this morning's biggest gainers and losers. Starting off with our biggest gainer this morning, and that is Galera Therapeutics. Under the ticker GRTX, they're currently up 45% so far in the pre-market, followed by Nokia under the ticker NOK, who's up 18%. And Willamette Valley Vineyards under WVVI, currently up 21%. Our biggest losers this morning include Farmy Incorporated. Under the ticker FAMI, they're currently down 60%. Followed by Adverum Biotechnologies under ADVM, who's currently down 52%. And Cara Therapeutics under CARA, currently down 28%. Let's take a look at some notable earnings reports. Starting off with Facebook, who surpassed analyst expectations by a wide margin. Outstanding advertising revenue growth, aided by a 30% rise in the average price per ad, a 12% increase in the number of ads delivered, and margin expansion were the primary drivers for the results. The company reported strong first quarter revenues of $26.2 billion, topping consensus analyst of $23.7 billion. The 48% year-over-year increase was fueled by a 46% rise in advertising revenue. Furthermore, Facebook's average daily active users increased 8% year over year to come in at 1.88 billion. They reported earnings of $3.30 per share, up 93% on a year-over-year basis, and outpacing street estimates of $2.37 per share. Their operating margin expanded to 43% from 33% in the same quarter last year. The Facebook stock does come in as a strong buy with an average upside potential of about 18%. Many analysts reiterating their price targets today are hovering around that 30% potential upside. We also heard from Apple, who posted strong second quarter results. Apple's second quarter earnings more than doubled on a year-over-year basis to $1.40 per share and outpaced streets' estimates of 98 cents per share. Their revenues jumped 54% to $89.6 billion, coming in well ahead of analyst expectations of $77 billion. Services revenue came in at $16.9 billion, up 27% year over year, while Mac revenue grew 68.5% to $9.1 billion. Additionally, iPhone sales of $47.9 billion surged 65% from the same quarter last year. Notably, Apple recorded strong growth in each of its geographic segments, including the Americas, Europe, Greater China, Japan, and the rest of Asia Pacific. The Apple stock does come in as a strong buy with an average upside potential of nearly 17%. Many analysts reiterating their price targets today are between 23 to 38% potential upside. Coming in with mixed first quarter results was Teledoc. Their shares fell as losses for the provider of virtual healthcare solutions widened in the first quarter. The company reported a net loss of $199.6 million, compared to a loss of $29.6 million in the same quarter of last year. A diluted net loss of $1.31 per share was wider than analyst expectations for a loss of just 54 cents per share. However, their revenues did jump 151% year over year to $453.7 million, which did beat analyst consensus. Access fees of $388.2 million rose 183% year over year and comprised around 85% of the company's total revenues. The company's paid memberships in the U.S. hit 51.5 million in the first quarter, which was a rise of 20% year over year. The Teledoc stock does come in as a moderate buy with an average upside potential of 38%. Two analysts reiterated their price targets just today, between 26 and 56% upside potential. And lastly, we heard from Nokia, whose earnings were surprisingly good. Net sales rose 3% year over year to 5.08 billion euros, beating the estimates of 4.75 billion. This was due to strong sales of 5G equipment. Nokia's comparable gross margin rose to 38.2% from 36.4% in the year-ago period, which the company again said was due to growth in 5G, while its operating margin was 10.9%. Comparable net profit of 373 million euros crushed expectations of just 90 million euros. It maintained a full-year guidance for sales of 20.6 billion euros to 21.8 billion and an operating margin of 7 to 10%. The Nokia stock does currently come in as a moderate buy with an average upside potential just over 20%. Also this morning, we'll be hearing from Domino's, McDonald's, Overstock.com, and Royal Caribbean Cruise Lines. And in the after hours, we have Amazon, Neo, and Twitter. So that is Thursday's pre-market morning update, bringing you up to speed with what you need to know before the market opens. If you enjoyed today's video, please hit that thumbs up button and leave your thoughts in the comments down below, or just say good morning. Thank you guys so much for watching, and we will see you back here next time.